Well, good morning, everyone, and thanks so much for joining us on the call here today. I am just going to try and give us a bit of an overview of the platinum group metals market. I'm sure if you're on the call, then you are interested in the market and probably know a reasonable amount about it. So I will keep this fairly brief, but it's a pretty interesting space. It's a pretty dynamic space right now, and it's one with some very interesting investment opportunities as we are here to learn about today. So this slide's fairly obvious. This is the starting point of this discussion. It shows the platinum and palladium price charts for the last, I think this covers 15 years each. Yes, 15 years each. And so the point, I mean, it says starting point. It is the starting point of this discussion clearly because these are very different price charts. Obviously, we have platinum, which went on this insane price run in the last precious metals market, gaining 450% in 7 years. And that move really mattered because when a required component in a car part quadruples in price, car makers respond. They don't want to pay that much. And so they switched from platinum to palladium. And so you can see the result of that. The platinum price has declined steadily over the last 9 years, while the palladium price has moved in the opposite direction. And of course, that price move got quite a bit more dramatic in the last year, and palladium is now worth more than gold, and a lot more than gold, and is at all-time highs. Okay, so why did that matter? Because this increase in demand from car makers, auto catalysts now represent 75% of the palladium market. So we went from very little to 75%. That's a huge increase in demand on palladium, and supply just couldn't keep up. Most palladium is produced as a byproduct from mines that are primary nickel or platinum. As a good example is the fact that Norilsk Nickel is the world's biggest palladium producer. So that in itself means the fact that the metal is produced primarily as a byproduct means that it is difficult for palladium to respond to price increases. We need the price to increase for nickel and platinum for those mines to start producing more. Then you layer in the fact that the platinum mines from which we get our palladium are largely in South Africa, which has been plagued with cost, power, and labor issues. And we have a palladium market that's been in deficit for 8 years now, and a significant deficit. This isn't just a little bit missing. We're now very short on palladium, and we have been for quite some time. And we don't have any solution in sight. I mean, the quotes that I have here, and there's no solution to this problem in sight. So JT Matthews is sort of the leader in assessing the PGM market. And these two quotes, the quotes at the beginning of this slide are from them. The palladium deficit is likely to deepen in 2020 as key car manufacturers are required to comply with even more stringent environmental requirements. And so that simply means more of the precious metal in those auto catalysts, and that's going to lift world automotive demand above 10 million ounces. Look at what I have circled on this slide. That is total supply. You can see that that's 6.9 million ounces. That's a big gap, right? Just auto catalysts alone need 10 million ounces, and gross supply or total supply is only about 6.8 million ounces, 6.9 million ounces. That's the deficit that we're facing, and it's not going to change this year. Will it change in the long run? Yes. It will change for two reasons. First of all, there are new palladium projects and mines being advanced, expansions at operations, but those aren't really going to have an impact for another few years. 2023 is sort of when those mine expansions start to come online. And over that same time frame, we are all sure that car makers will start switching back again. If platinum's going to be way cheaper, let's go back to using platinum. Or probably have some sort of middle ground, right, where they use both so they stop pushing these prices in opposite directions. So that will happen, but both of those things take time. They are not going to have an impact this year. And so the palladium market is going to remain in significant deficit this year. What does that mean for palladium prices? It's pretty hard to predict that palladium prices are going to jump from here when we're looking at a price that has already moved from $1,000 to, pick your price, $2,200, $2,300 in the last little while. So I'm not going to stand here and say that palladium is going to keep running. What I am going to say is that we are in a new palladium price paradigm. And that's a pretty hefty statement. This is a long-term price, or this is not such a long-term price chart, but this looks back at where palladium has come from. Palladium was worth less than $1,000 an ounce for many, many years. Now it's worth over $2,000 an ounce. That's a new paradigm, and that matters because it puts projects in a completely different set of calculations in terms of whether they make sense. Now, when we have prices that jump, vanadium or molybdenum, those prices jump, you don't want to immediately start looking at projects and saying, oh, well, it didn't make sense at the previous price, but at this amazing new spot price, it makes sense. But when you're looking at a market that has this fundamental deficit that is going to persist for quite a few years and will only be solved by bringing new mines and new projects forward, you do need to incorporate a dramatic change in the pricing paradigm, which is what we're looking at with palladium. It's happening because we need new mines. So let's use some more aggressive pricing when we're looking at mine calculations. And so what this all comes down to for me is that the palladium fundamentals are very strong. The price has run, but we need new mines. That's the reason the price has run. And so it basically, for investors, it makes sense to have, in my estimation, project level exposure to the palladium market right now. I think the price is going to remain elevated for the foreseeable future, the next year for sure, likely considerably longer than that, because I don't see the fundamentals changing until 2022 at the earliest, 2023 perhaps. So I think we're going to have an elevated palladium market for quite a few years. In that context, it's project level exposure right now that makes sense because palladium stocks have absolutely moved, but there just aren't that many to choose from. There just aren't that many projects that are advancing towards mines and therefore could contribute to helping to solve this problem. So I think that project level palladium exposure makes a lot of sense right now. I do want to say, what about platinum? This is, I did want to address both sides of this. Well, if you look at this chart, you can see that in the last year, the price of platinum, which had declined for many years, did start to recover this year. And the reason that it did that was investment demand. It was not from industrial demand. It was not from catalytic converters. It was from investment demand. And that was for two reasons. First of all, there was a sense that the price had come down so much, there had to be an investment upside. And it was a bit of a self-fulfilling prophecy because as investors moved in to take advantage of that potential upside, they created it by pushing the price up because they bought into platinum ETFs. Platinum ETFs then had to buy platinum. That helped the price gain. So they created a bit of their own outcome, which is great. Right now, we're in a situation where we would need that to continue for platinum to have more upside in the near term. There is not likely to be any growth in platinum. Platinum is likely to remain in surplus unless we have sustained investment demand. Is that going to happen? It's tough to say. Platinum and palladium definitely track the precious metals market more broadly. And as we record this today on February 21st, we have a gold price that's almost $1,650. We have a very strong gold bull market in action. So that will pull the platinum group metals along with it because they are another classic way of getting that safe haven investment exposure. And so there may be upside in platinum from here, from the investment side of the story, but you only play platinum specifically if you believe in the investment side of the story. And there's reason to believe in that. But I think taking a step back, the big picture answer here is palladium is where there's opportunity. The opportunity sits on the project scale, so investing in companies that are advancing projects that have the potential to fill this long-term supply gap that we have in the palladium market. The interesting thing is that most projects that have palladium, of course, also have platinum. So in a sense, you don't have to choose. If you like the palladium story and you think there may also be upside in platinum, well, buying in at the project level gives you both of those opportunities in most cases because the metals coexist. And this is all happening in the context of a rising precious metals market that I think that would be another whole presentation, but a rising precious metals market that has very strong fundamentals as well that supports the investment side of this story. So all told, I think it makes sense for investors to have PGM exposure. I think that PGM exposure should be driven by palladium, and I think palladium project level exposure is what makes sense. I think there's not a lot of, it's a difficult game to try and guess what precisely is going to happen with the palladium price from here, but there's good reason to believe that we're in a new price paradigm for palladium, where projects that perhaps haven't made sense for decades now not only make sense but are needed because of this deficit in supply that has no near-term solution. So that's my overview of the market. There's a lot of these topics that we could dive into in a lot more detail, but I think that suffices for now. So thanks very much for your time today. And if you have any questions, please always reach out to me, Gwen at resourcemaven.ca, or check my website, which is resourcemaven.ca.